Good morning and happy Friday, all you wonderful people out there. Today is May 12th, 2023. Today, I got to talk about oil because oil is forecasting the mother of all global recessions. Now, why do I say that? I say that because we are seeing tremendous supply destruction in oil markets. We just got OPEC plus numbers from yesterday. The OPEC plus countries, which is OPEC and Russia basically, they missed their production quota by over 2.5 million barrels in the month of April. All right. Keep in mind, this was after the voluntary production cut. OPEC is producing a lot less oil, and yet over this same time period, prices are moving down. Now, one of these things doesn't make sense. Less supply, price should go higher, right? Well, the only way that doesn't happen is if demand destruction is outpacing supply destruction. And it looks like that is exactly what's happening. And you can look at the price of oil, and then you see similar things. So somebody in the comments mentioned copper. The price of copper is doing the same thing. The price of lumber is doing the same thing. These commodities, which are perfect barometers for the health of the economy, are all moving south in a big way. That tells me that there is some serious global demand destruction on the horizon. Meanwhile, Energy Secretary Granholm, who doesn't know anything about energy, she's in the press today saying, oh, don't worry, as soon as June, the United States will begin filling the Strategic Petroleum Reserve. Now, anybody who's been paying attention to politics for the last few months understands that when Energy Secretary Granholm says the U.S. is going to start filling the Strategic Petroleum Reserve, what she really means is we have no intention of ever filling the Strategic Petroleum Reserve. We just really don't want OPEC to cut oil production. And OPEC is scheduled to get together. The next meeting of the Joint Ministerial Marketing or Monitoring Committee, OPEC Plus's next big meeting, is going to be June 4th. So do you think it's any coincidence that Secretary Granholm is saying, oh, don't worry, we're going to start refilling the SPR just a few days after that next meeting, so there's no need for you guys to cut production to maintain prices. There's a whole bunch of pent-up demand coming from the United States any day now. The check's in the mail, I swear. Now, you may recall the U.S. had made similar, I don't want to say guarantees, but similar overtures in the past. And then at the beginning of this year, Secretary Granholm came out and said, no, the U.S. would not be refilling the Strategic Petroleum Reserve. This is back when prices were in the low 70s, high 60s the last time. And well, shortly after Granholm announced that the U.S. would not be refilling the SPR as planned, there was voluntary production cuts were made by countries like Russia and Saudi Arabia. They're upset. They're pissed that the U.S. jimmied the price of oil lower last year by dumping the Strategic Petroleum Reserve, and now they're not going to refill it. So OPEC is saying, you know what, you're going to get higher oil prices. We're going to cut production. Now here we go. The next OPEC meeting is coming up, and Granholm is repeating the same sentence, expecting anybody to believe her this time. Why? I don't know. It's all about trying to convince OPEC not to cut production further. OPEC needs to cut production further just to maintain oil prices where they are, and where they are, low 70s, pushing high 60s. So we should be seeing significantly higher oil prices right now with all of this supply destruction going on, and we're not. That tells you something. Elsewhere, the debt ceiling talks are going nowhere. Congress is doing what they do best, absolutely nothing. Meeting between Speaker of the House McCarthy and Mitch McConnell and Democratic leaders in Congress, along with President Biden, has been postponed. It was supposed to happen today. The staff has been negotiating behind closed doors all week. Apparently, they have gotten nowhere, and so that meeting has been pushed out to next week. With that, we are going to shrink my big melon of a head, and let's see what is going on in markets this morning. We've got the S&P is marginally higher this morning, up 11 points, or about 0.25%. At 4,141. We've got the Dow Jones is up 51 points, about 0.16%, currently trading at 33,361. And the NASDAQ is up about 0.25%, 28 points higher at 12,352. So stocks marginally higher today, no big moves one way or another. Check out the DXY, folks. The U.S. dollar is going higher this morning. Not a big move, only about 20 basis points, but this is after a big move yesterday. And have we finally broken out of this 101, 102 range? We're sitting here now 25 basis points above 102. Check this out. I've been watching this chart for a while here. This head and shoulders pattern on the DXY going all the way back to about May of last year, which you would think means the dollar is heading lower. But we haven't broken that neckline. We've been flirting with it for a while now, for the last month or so, bouncing between 100 and 102. Now, here we are right here. I just want to zoom in. We're kind of in the upper end of this band that we've been in since early April right now, threatening to break out of it. Now, I've been talking to my moderator, Mish, about this morning. I think the debt ceiling is a big player right now in the DXY. And either way the debt ceiling goes, I think the dollar's going higher. And why do I say that? Well, if the debt ceiling pops and we default on U.S. Treasuries, that's going to be just economic calamity. And anybody who's holding dollars in that scenario, anybody who's got cash on hand is going to cling to it tightly. Nobody's going to lend it out. Interest rates are going to spike. It's going to cause a shortage of dollars everywhere in the world. So people will be willing to trade anything and anything to get dollars because they desperately need them in that scenario. Well, that would send the DXY sharply higher. That's one scenario. The other scenario is we actually do raise the debt ceiling, the most likely outcome. And what do you think Janet Yellen is going to do the second they raise the U.S. debt ceiling? She's going to go reload the Treasury General account. She's going to go borrow $600 or $700 billion right away to refill Uncle Sam's checkbook. Well, the Fed isn't going to buy those treasuries. The Fed is still engaged in quantitative tightening. So that money is going to be borrowed from the existing liquidity in the bond market, which means Janet Yellen is going to be gobbling up all the dollars available in the market. She's going to create a shortage of dollars. So no matter which way the debt ceiling plays out over these next few weeks, I think either way the DXY is breaking higher. And that's why I think this head and shoulders right here is a big head fake. I think the Dixie is moving this way. I said this way. Give me an arrow. All right. TradingView doesn't want to draw an arrow for me this morning. So moving on from there. Looking at the bond market right now, we got a big move up in the 1-month Treasury last night, currently up 15 basis points or 2.75% at 5.69%. Now looking at the yield curve right now, folks, the inversion between the 1-month Treasury and the 10-year Treasury is almost 130 basis points. All right, I'm sorry, 230 basis points. Where was I? You can get 2.3% more interest lending money to the government for a month than you can lending it to them for 10 years. Okay, this is a totally healthy yield curve, folks. Nothing to see here. Moving right along. The market is telling us there is a risk inside of 1 month. Something bad could be happening. And, we had that 4-week Treasury last night, and we saw a big jump up at 5.77% on the 1-month Treasury yield. This is not good, folks. The bond market is trying to tell us something. Looking over at the commodity space, we have got the silver smash continues this morning. Gold is currently up $2.65, about 0.13%, still over 2,000 at 2023. Now, silver got absolutely crushed yesterday, over $1. It was down. At one point this morning, it was down about another 40 or 50 cents. It looks like it's clawing back some of that this morning, but we're at 24.23 on silver, down 18 cents. And I got to send a shout out to the Happy Hawaiian on Twitter. He posted this one because we crossed a pretty big supply threshold in silver yesterday, below 30 million ounces in the registered category. And Happy's calling this one out here on Twitter. Again, follow the Happy Hawaiian on Twitter. I highly recommend that feed. He's a good guy. The 30 million threshold on registered silver inventories has been breached. Feels like yesterday when it was over 150 million ounces. Now, folks, even though the price of silver, it's a little bit higher than it was a few months ago right now, we're still in this low 20s range. The supply of silver in inventory at the COMEX continues to be bled down. They've been chipping away a few 100,000 ounces day in and day out, really going all the way back to the beginning of 2021. Now, at some point, this will mean higher prices, and Happy's calling this out in his tweet here. He's saying this is the level where we could see low inventories support price. And of course, right as we cross that threshold, in comes JP Morgan with the price smash, and they drop the price of silver by $1. So that almost looked like a coordinated attack to coincide with that 30 million threshold. I've heard a lot of people who spend a lot of time in the precious metal space say that 30 million threshold was going to be a big number. When we cross below that, we could see fireworks in silver. Now, I have to throw in the caveat, folks, that If we're looking at a sharply higher DXY, if we're looking at a dollar shortage or a deflationary bust, that's going to send silver prices lower because there just won't be enough dollars available to chase assets, including silver. That will be very bad for gold, silver, Bitcoin, housing, everything. So again, shout out to Happy Hawaiian, but that was a big number. But here's the big story this morning. U.S. could start buying oil for reserve after June sale, Energy Secretary says. Emphasis on could. Why is this news? Why is this news? Yesterday, the U.S. could start buying oil for the reserve after a June sale. Why is it news today? Why? Because they're trying to jawbone OPEC Plus away from making another production cut. They've done this before in the past. They have said we could start filling the Strategic Petroleum Reserve as early as January, and then January came, and they didn't do it. So that's why I think this is kind of funny. U.S. Energy Secretary Jennifer Granholm, again, she knows nothing about energy. I don't know why she's in there. Told lawmakers on Thursday her department could start repurchasing oil for the Strategic Petroleum Reserve after completing a congressionally mandated sale next month. Now, I want to add this congressionally mandated sale. This is something that's been going on since, I believe, 2017. That's nothing new. They have been selling about 20 million barrels a year since then. This is not part of the 180 million barrels that was dumped last year on the market. The congressionally mandated sale of 26 million barrels will be completed by June, and it's at that point where we will flip the switch and then seek to purchase. Granholm told lawmakers in a hearing at the U.S. House of Representatives, and if you believe that, I got a bridge I want to sell you. Now, check this one out on Twitter. This is going to be a little hard to read, but this is a chart that is showing all of the OPEC countries, how much oil they produced and what their quota was and whether it was a miss or a hit. Green is showing a miss, red is showing a hit. You can see as we go down through all these countries, almost all of them missed their production quota for the month of April. The total OPEC and OPEC Plus production quota for April was 40.1 million barrels, and yet these countries only produced 37.5. They missed by over 2.5 million barrels per day of oil not hitting the market. You would think this would be sending oil prices sharply higher. This much oil supply destruction. And yet look at what oil prices have done. They're actually down over that same period. Down bigly, really going all the way back to the announcement of the SPR dumping from years ago. So oil right now is telling us, number one, they don't believe Secretary Granholm because prices are only marginally higher today, up 30 cents. A 2.5 million barrel per day miss by OPEC Plus, and the announcement that the U.S. may start refilling the Strategic Petroleum Reserve, and oil is only up 30 cents. All right, oil is telling us right now that there is some serious economic mayhem on the horizon, folks. And if you don't believe oil, talk to copper. Look at what copper prices have done. This is going back to about the start of the year. Copper is telling us an economic slowdown is coming. Copper is used in electronics. Copper is used in building construction. It's used in virtually everything. Oh, if you don't believe copper, take a look at lumber futures, breaking below a key level of support recently. Lumber futures down in the toilet. This is a good indicator of the housing market and the demand for home construction. Folks, these numbers don't lie. The commodities are telling us that there is something bad coming, that there is a severe global economic slowdown on the horizon. I mean, I've been sounding the alarm on this for the better part of 2 years now since I started this channel. So it's nothing new, but, you know, copper, oil, lumber, all moving down sharply at a time when supply is supposedly getting tight of these things. That should tell you that the demand situation is not good. Also, here we go today. The debt ceiling meeting between Biden and congressional leaders was postponed until next week. Not going to spend a lot of time on this, folks, but the staff has been meeting in secret to talk, not in secret, behind closed doors. There hasn't been press in the room, but they have been meeting, trying to move the ball forward on this debt ceiling discussion. And I'll just give you a little bit right now. Everybody in this meeting reiterated the positions they were at before the meeting. McCarthy said the leaders left their meeting Tuesday with little progress. Every leader present except for McCarthy agreed to remove the threat of default when asked by Biden, according to Democratic leaders. So I guess what that is right now is that is Biden complaining that Speaker McCarthy would not remove the threat of default at the onset of negotiations, which wouldn't it be nice if on day one of any negotiation, you could just get everything you want up front and then begin the negotiations? It's not really how negotiating works. A good mediation, a good negotiation, both sides walk away a little pissed off. That's not what they're trying to get. Biden is saying right now, give me everything I want first, and then we'll talk about your side. Not really how negotiations work. At the same time, a default on the debt ceiling would be rather catastrophic for the economic situation, although I would add it would be very catastrophic for bankers and for super wealthy and the elitists who are hard at work ruining this world right now. Might not actually be all that bad for the average person. Now, we are looking at millions of people losing their jobs, which is really bad for the average person. We're looking at banks possibly defaulting. I'm not saying it would be painless, but if we do just arbitrarily raise the debt ceiling and never cut spending, the U.S. will default on its debt. It will just default in a stealthy, more sleazy way through inflation rather than an outright default, not actually paying back the dollars. Either option right now represents a default. One way or another, the United States will default on its debt, either via inflation or via outright defaulting on the payments. And right now, the U.S. Treasury General Account is currently at $154.8 billion. The burn in cash was accelerating last week. It has slowed down significantly this week, so maybe we do have until the beginning of June. We'll see what happens next week. But the clock is ticking on this one, folks. And last but not least, I just want to mention two quick things. Linda Yaccarino in talks to become Twitter's new CEO. According to the Wall Street Journal, and NBC Universal released a statement today that she is out over at NBC Universal. So it looks like Linda Yaccarino is going to be the new CEO of Twitter. She is a WEF darling, and let's just say everything I've read about this woman, and I don't know very much about her, but I can tell you the far right doesn't like her because of her WEF associations, the World Economic Forum, and I can tell you that the far left doesn't like her because she has got some associations with some extreme right-wing characters, and supposedly she's worked with Trump in the past. I don't know any details about her associations with Trump, but let me just float this idea. If the extreme right hates her and the extreme left hates her, maybe she's the perfect person for the job. I just throw it out there. Again, I have not vetted this woman at all. Let's just see what happens. And last but not least, the regional bank stocks today, looks like PacWest is taking a breather, up about 2.7%. So it has halted its slide from yesterday. And the regional bank ETF, ticker KRE, is up 4 cents or 0.1%, essentially unchanged. So no fireworks in the bank stocks today, at least for the time being. All right, guys, I just want to say thank you very much, everybody, for all your time and for watching. I love you guys. Hi, Mom. Hi, Dad. I love you guys, too. Shout out to my Patreon supporters. Thank you for everything you guys do for the channel. And it is Friday, which means this afternoon, my favorite time of the week, when I get to talk to you guys in my long-form live stream starting at 3:15 p.m. Eastern Time. So won't you please like and subscribe while you're here. And until next time, live small and dream big.